Right, traders, welcome back to the channel. Here we have our weekly outlooks of the two Forex pairs I'm looking at. So here we have the euro dollar on the weekly time frame. And now we're going to be going over a higher time frame outlook. We're going to start on the weekly time frame, then we're going to go down to the daily time frame, then we're going to go down to the 4-hour time frame, and we're going to dissect what I think price action will do this week. Now we're starting on the weekly time frame because we want to get a holistic overview of what the market's going to do. We want to understand where the market's likely to go to next, right? So on the weekly time frame, we have our structure that's been bearish for years. And now we had in 2022 a change of character to the upside. So we had a change of character in this region over here, with this being the all-time low over here. Now, since then, after this change of character, we've seen price creep into the premium of this range. So this here being the EQ, and anything above the EQ being a premium, right? Now, if we dissect price carefully in this region over here, we saw that in July of 2023, so July of last year, we saw price give that creep into the premium, right? Now we saw price drive down into the discount. But you need to ask yourself, what has this high achieved, right? What is this high over here achieved? Now, this actually is a weak high. And the reason why it's a weak high, as I'm sure a lot of people know from basic smart money concepts, is the fact that it hasn't actually produced a new low. Price came down to this region, but remember our low is all the way down here. So price at this current moment, right, as we talk live on the 17th of March, this is being recorded, we haven't seen this high over here actually follow through and make a new low. Therefore, this is a weak high, right? So this is why the red line is over here. So this weak line over here, sorry, this red line over here represents a weak high. And that weak high is what we call our higher time frame drawn liquidity, right? This is our weekly drawn liquidity, right? So because of that, we have a large liquidity pool over here in the form of a weak structure. So what I expect in the longer term, it may not be this week, it may not be next week, it may not even be next month. But what I do expect is for price to head higher, sweeping this high and eventually getting up to this price point over here. Now, the reason why I expect price to get up to at least 1.1516 is because we have a fair value gap just over here. So price has left an inefficiency over here. And just beneath that, we have an inducement over here. So we have a liquidity pool that's been dropped just before the POI, which is above it, right? So what we have here is we have inducement, which gives this POI extra confluence, right? So we have inducement over here. This inducement, right, will entice the market to head higher because we have a pool of liquidity over here, or liquidity stashed, which hasn't been swept into. So this is my overall outlooks on the euro dollar on the weekly time frame. You need to understand this is the weekly time frame, and it may take price weeks or even months to get up here and to fulfill this. But the weekly drawn liquidity is minimum 1.1279 on the euro dollar. So if we go down to the weekly time frame, sorry, the daily time frame now, what we can see is we've seen price over here, we've seen price react off a bullish POI in the discount, and now we've headed into the premium. Now, the draw on liquidity on the daily time frame from an ICT concept, from an ICT perspective, where is that next draw on liquidity on the daily time frame? Now, the answer to that question is quite simply here. This is the next daily draw on liquidity. And the reason why this is the next daily draw on liquidity is the fact that this high over here, just like the weekly time frame, has headed lower, has failed as of now to make a new low, and has since then crept up into the premium. Now, bearing in mind the daily structural low is down here, right? So this high over here has not broken this low over here. Therefore, it is weak, and it is the draw on liquidity, DOL, the draw of liquidity. So in the next upcoming days and weeks, I do expect price to head up, eventually up to this level, but really this daily fair value gap over here, because we have price giving an inefficiency over here. So I expect price to get up to a minimum of 1.117 as a minimum. Okay, based off the weekly and the daily. Now let's go down one more time frame to the 4-hour and see how the 4-hour is behaving. So the 4-hour is currently dealing between. This is how I have my structure. So we have the 4-hour dealing from this high down to this low. Now, perfect. So now we need to understand we have our dealing range out the way. Now the next thing to look at is we need to look at our premium and discount using this thing over here. We use the Fibonacci tool to identify the equilibrium. So anything above the equilibrium is essentially the premium. So what we have over here, I want to draw to people's attention, is that we have equal highs over here. So this is our inducement, right? Just a quick recap of inducement. Whenever we have a POI, like we have over here, so a POI leaves a fair value gap. Here we have a fair value gap over here. When a POI heads down lower and leaves liquidity just beneath it, right? Price is more in Price has a higher probability of getting back up to this zone simply because there's a liquidity pool over here before potentially reacting bearish. So equal highs is a classic form of inducement over here, and that is what we have here in the live markets over here. We have equal highs forming just beneath this POI that leaves an inefficiency. So this is exactly what I expect here on the euro dollar. So I do expect price to get up to this sort of level over here. So I expect price to get up to 1.101 as a minimum going into the next week or the next 2 weeks or so. But this is my overall outlooks here on euro dollar, looking at the 4-hour time frame. So now if we skip over to GBP USD on the weekly time frame, as you'd expect, would paint quite a similar picture to that of the euro dollar, right? So what we have over here is we have price trading from this high down to this low over here. Our EQ has been marked by that 50% level, and what we have over here is we have price giving us this weak high over here. The reason why this high is weak is because look at how far it went down. It hasn't made a new low, because remember, the low is down here. Price hasn't made a new low. Price has actually stopped here. So what I would expect in the near future is for price to get higher, is to seek higher prices up to this price point over here. Now, why is this a price point of interest? Well, it's the same as the euro dollar. We have an inefficiency over here. So here we have a fair value gap, which price has a reason to seek higher prices so that it can fill this inefficiency over here and target this draw on liquidity. So this is the next weekly DOL, draw on liquidity. Okay, it's important to understand that. So I expect price to get at least up to 1.315 at least. Okay, now if we notch down a time frame to the daily time frame, the daily time frame paints a similar picture where what we had over here is that we had bullish structure. So we had price giving a high, a low, a high. Prices come into a discount. The discount is here, the 50% level. Prices come into a discount, tapped into a POI, filled an imbalance over here, tapped into a POI, and is now headed higher. So now you have to ask yourself, this weekly drawn liquidity over here, if I bring that down to the daily time frame, this weekly drawn liquidity essentially becomes the daily high, the daily structural high, which also, if you look carefully, has failed to actually make a new low. Price stopped here before heading higher. So this is the next drawn liquidity on the daily time frame. So again, I expect price to get up to 1.315 as a minimum. Okay, going down one more time frame, let's see what we have. Let's see what the 4-hour has. Now the 4-hour was in a lovely range, which is very difficult to trade, and we were in this range since the end of last year, sort of December going into January. So we had a huge range for 2 months. It was only in February did we break that, you know, sweeping some liquidity to the downside in February, early February, and now we broken structure to the upside, right? So we've broken the H4 highs over here from December and January. So from here, what do I expect? Now there's two scenarios. So the daily time frame, if I bring your attention back up to the daily, points at the draw of liquidity being higher. But the 4-hour time frame paints two potential pictures, right? Because we've broken a structural high, so when we have a break to the upside, we should be expecting somewhat of a correction before we continue. So this could be our correction over here. So either we could see price tapping into a POI that leaves a fair value gap in the discount before heading higher, or we could simply just reverse at any time before that just to head higher. So the overall market narrative is bullish, but we need to keep our eyes peeled for potential bearish pricing down to this POI over here. So the POI is roughly at 1.2648. So once this POI does get respected, we could then very likely see higher prices. So this is my overall narrative on GBP USD and again on Euro USD. And this is something I'm going to start doing every week because it's quite popular with the public members and also the private members at Liquid FX. So if you like this video, give it a like and thumbs up. And I look forward to seeing all of you in the next one.